And today we have the honor of having Andrew, who's currently working with the business development team at Coinlist, a leading crypto distribution platform that has hosted successful ICOs for projects such as Solana, Flow, and Algorand. Coinlist is currently valued at over $1.5 billion and has incorporated functions such as wallet trading, as well as staking services for major cryptocurrencies on top of their ICO platform. And a little bit intro about Andrew. So prior to joining Coinlist, Andrew had been working as had received his MBA from Marshall and worked as a seasoned trader and analyst in traditional asset and management firms. Andrew had also worked with Zynga, a leading video game developer company, on corporate strategy and development. We're very happy to have Andrew here back on campus and have him share a little bit about his journey into crypto and what's going on with Coinlist in the current market conditions. So without further ado, let's give a warm welcome to our guest and let's get started.
Nice to meet you all. Thanks for coming. I'll give Jeff just gave me a quick background on myself. Yeah, traditional finance, then came to USC, got my MBA. From there, I went and I joined Zynga's M&A team where I was working there for about a year. And I think what's relevant for what people like to hear is kind of like that journey into the crypto space. So, you know, this was my second semester of my MBA graduation year. COVID started hitting and I just like went down the crypto rabbit hole, basically. Started at Zynga. What ended up happening was I was spending all of my time in crypto, like outside of work, even like during working hours, you know, being in a lot of these discords, participating in different governance proposals for these projects that are out there. I was actually, on top of working, I was a moderator for the Fade protocol, which is a very big launch in DeFi last year, right when they launched at Genesis, which was what they called their token launch event. Started like thinking to myself, okay, I'm spending all of this time to like dive in, you know, all head on, and reached out to some people within the crypto space, started networking a little bit, got in touch with somebody at Coinlist through a friend of a friend, and, you know, Coinlist, things have been going quite well. We're growing, you know, very fast, and I joined the sales team back in June or July of last year. And on the sales team, what we do is essentially sourcing and vetting the different projects that are coming through the pipeline, who don't have a token yet, but do have plans to launch a token in the future. And they come to Coinlist and they want to launch their token on our platform. Now, why launch a token on Coinlist platform versus other platforms that are out there? I think historically, if you look at the projects that we've launched with, we've developed a really, really strong brand, and I think we're known for being the premier stop for like the highest quality projects. So if you go to the slide, I think it's slide 7 or 8. That's this one right here. So if you look at here are some of the projects that we've launched on our platform. And all the way to the left over here to your right shows the returns if you participated in a sale on Coinlist. So obviously,
Andrew, can I take a picture of this? Is this
no? Yeah, this isn't meant to be.
Okay. Yeah. Okay. So I think the stats are all
stats are online. So, yeah.
Oh, okay.
So, so if you're a project wanting to launch a token and you want to get that recognition and be it through a quality provider, service provider like us, you know, they come and they reach out. We'll source proactively on our end, but I would say, you know, given the inbound that we get, like 80% is more inbound and projects wanting to launch a token on the platform, and 20% is just outbound outreach. You know, and if you can imagine, that inbound is probably, you know, it's quite substantial. So it's not only sourcing, but then it's vetting which are, you know, the highest quality projects that we should be launching with.
sorry, Andrew, Can we, before, what does Coinlist do exactly, like for them to do an initial coin offering? Like, is it a centralized platform for them to?
Yeah, so Coinlist is we're the market leader
Okay.
for a centralized platform to launch tokens.
Okay.
Now we have other business lines as well. So the growth engine really starts with our token sales, our public token sales. And then with those public token sales, what happens is we get those assets under custody and our users now own these assets, right? So we have to distribute these tokens out to our users. So that's a revenue generating opportunity. Then these users could go onto our platform and they could trade on the exchange. So we start earning trading revenue and exchange revenue. There's certain projects. So if you look at projects here, like Flow, for example, we offer staking services. So if you want to stake your Flow token with a validator, you could do that through our platform and earn Flow rewards. So we'll take a cut of those Flow rewards as revenue. But a lot of these opportunities that I'm talking about outside of the token sale are all downstream revenue opportunities. So going back to what I was saying before, like the token sales being the growth engine, if we could continue to pump out high quality sales, if one sale has 5 revenue streams and now we're launching 5 sales, let's say, so that's now 25 additional revenue streams that we now have. So you can see, like, once we get that token sale, we get this recurring revenue that becomes this really sticky business that creates this little flywheel for Coinlist. Do you have another question?
What's the cost of that? Something like that look like? Like, let's say I have a coin of, say, any coin. Is it a nominal or is it an agreement that that particular coin comes to an agreement with Coinlist, or?
Yeah, so for our public token sales, the fee is paid by the project. So the project there'll probably be an entity behind that out of the BVI, and that entity is the one that pays us for launching the token sale. We take a portion of our payment in US dollars and also in the native token of that project. So part of the reason we take our payment in the native token is, one, there's an alignment of interest, right? So we're now holding a token that we're launching a project with because we believe in that project. So having that alignment of interest also keeps us true to that quality bar, which is what I was telling you all about in the beginning. And if we're picking these high quality projects and getting out a decent amount of volume, and these projects are successful, it starts to be a really lucrative revenue opportunity just from like a capital gains standpoint on the tokens that we get. And then all of those ancillary downstream revenue opportunities are quite high margin revenue opportunities that, assuming that we're not churning out users and we continue to grow our user base, which we are doing, the additional revenue that we make really starts to flow down to the bottom line. Because now that we have the exchange built out, and there's still a lot of engineering work that needs to go into things, but there's been a lot of engineering work where a lot of the fixed costs that are associated with getting the exchange up and running are now largely in the past. So if you have a high fixed cost business, but you're growing very quickly, all that additional revenue, is quite high margin. So that's the flywheel effect. And on my end, I don't touch the exchange listing or staking piece of the business. I pretty much primarily focus on our public token sale business, which is that first piece that really starts that flywheel of what we've been talking about. So I did quite a bit of talking right there, just kind of like pointless business. Thanks for interrupting me. That's probably a better way to start.
Let's skip 7 slides, right, Andrew?
Yeah. Well, I just got these slides a little while ago. That's why we're jumping around. But does anybody have any questions on just sort of underlying business or how things work?
This might be a silly question. Are you guys available in the US, like other projects like down there?
Yeah, so we have our exchange business could offer trading of certain tokens within the United States, but that's a great question. So one of the roadblocks that I run into on the sales team when we're trying to increase the volume of sales that we're running through our platform is the legal and regulatory hurdles that we have to jump over. At Coinlist, we take the position that these tokens that we're launching are tokens and not securities. Now, in the US, there's a lot of questions around is it a security? Is it not a security? If you follow what's going on with the SEC and the chairman of the SEC, Gary Gensler, he's, I'd say, on the anti-crypto side of things. So to be extra cautious from a legal perspective to make sure that we're going to be a business in 5, 6, 7 years, we don't want to get in any sort of legal trouble that gives us some serious hangups, because it could potentially be a really big legal liability that we think that we could avoid. And what have we done to avoid those types of things? So for example, we've shifted our public token sale business over to the BVI. So we now launch our tokens out of the BVI subsidiary, which helps us get out of that gray area. We're still
What's BVI?
British Virgin Islands.
Oh, okay.
Yep. So we're still in that gray area, but taking steps along those lines. When I'm dealing with the different projects, one of the requirements that we ask of them, at least today, because we have some US entities, is for them to submit legal memos. One of those legal memos is from a US law firm that does an analysis on what they call the Howey framework. And the Howey framework is just, it's a test essentially of hey, there's 4 prongs in it. I don't know them off the top of my head. They deal a lot with decentralization and not relying on one central party. But essentially, a law firm will write an analysis and a memo to us saying in their opinion, the token is more on the token side of the spectrum. It's tough to find a legal firm that's you're ever going to come out and just flat out say this is not a security, it's a token. So it's, you want it, you get a difference in quality of memos sometimes from different teams.
Do you mostly see memos that are leaning towards the token side, or is it how's the business looking right now for law firms coming into the space and evaluating these projects on the side of security or not?
Yeah, so it depends on what type of project it is. So one, if you're a lawyer thinking about being a lawyer, definitely look into crypto, because there's going to be tons and tons of demand for it. And if you're skilled in that area, you can do quite well for yourself career-wise. But going back to which projects are more on the token side, I'd say layer 1 blockchains, layer 1 proof of stake blockchains as an example. So when determining whether or not a token is a security, one of the things that a project would like to prove is that their token has utility, within the network itself. So we were talking earlier before we started this conversation about proof of stake. So proof of stake, you're essentially staking your tokens and helping verify the transactions that are going through on the blockchain, right?
Do you know how that's still encrypted? Making sure that the transaction is encrypted between the 2 parties.
That's a little off topic of where I'm going.
Proof of stake though?
So hold on a second.
Okay, because proof of work is you do all this math to prove that, whatever.
Yeah. That's a little off topic. So the purpose of what I'm trying to get at is talk about the token utility piece. So I need to stake my ETH on the network if I'm verifying a transaction, and if I'm a bad actor, that ETH that I'm staking gets slashed. And if you're looking of how Ethereum functions, it doesn't really rely on any central party by any means. Everything is running on its own in a decentralized manner, and the ETH token has legitimate utility. So I would say if you're looking at it from a token or security, Ethereum, there are people who disagree with me. Ethereum is very much a token, I would say. There could be questions around how Ethereum was launched, which make it a security, but we won't get into that. Now, on the other side of the spectrum, like if you look at, what would be a good example? Let's say a DeFi token that has a central core team that's behind the development of the protocol, where you really still need to rely on that core team for that protocol to continue to develop. So that decentralization prong that I was talking about in Howey framework, it's tougher to make a case on that piece. Then also, if you look, let's say hypothetically, this DeFi token accrues revenue from the fees generated on a platform. So I don't know if you all are familiar with Sushi Swap, but they do accrue fees, and if you stake your sushi, you could accrue fees earned on the network. Now, if you're buying the sushi token that is earning revenue, you would think that you're buying this token with the expectation that price is going to increase and you're going to accrue value through this revenue stake that you're taking. So like that would be much more on the side of security, and you could get lawyers out there that are very smart and great with their words to put together an analysis saying like, hey, no, it's not security for reasons X, Y, Z. But that would be kind of like the main differences.
Yeah, but I think, the market right now is becoming more and more speculative, and people don't necessarily think about the risk of investing security like tokens. In that sense, I think I've actually saw on the slide, I saw very interesting. It's basically like the position of Coinlist and sort of like this cycle of a crypto project. It seems like you guys are at like the forefront, at the entrance liquidity spot compared to, other decentralized exchanges and also centralized exchanges like Coinbase. So kind of like, can you walk us through like how, for now, because we have seen the ICO boom back in like 17, 18, and right now there are many more ways for projects to bootstrap liquidity and basically token launch, for either for NFTs and DeFi protocols and other platforms. Where does Coinlist come into this in this state of the market, and what's your guys' strategy?
Yeah, that's a great question, and at the end of the day, we take the view that there's going to be thousands of tokens that are going to be out there. We're not going to be able to launch every one of those sales. If you look at, I think last year we did 19 sales. This year, I'm hoping that we can get up to about 30 different sales. So, despite all of these other avenues for token launches that are out there existing, it's still such a big space that I don't think that we're going to have an issue continuing to generate more and more token sales. And then there are things that we could do at Coinlist that help us differentiate our public token sale from maybe something on like Sushi Swap with like the Miso launchpad. So if you're launching on a DEX, it's difficult to target the right token holders because a lot of times these launches on DEXs are permissionless where anybody could participate. You could put in some like on-chain requirements of like they've interacted with the protocol X number of times and things like that. But generally speaking, if you look at DEX launches, they're not as targeted as something like that. Whereas with Coinlist, there's two things that we do. So let's say it's a DeFi protocol that's launching on our platform. So what our mission is and what we try and do with every token sale is to really help a project that has like maybe a strong like small community and just grow it to be even larger. So on our platform, we've got 5 million users. You're not going to go find 5 million users on any DEX that's out there that are going to be participating in like a Miso launch as an example. Now we have 5 million users and we do have data on our users of, are they longer term token holders? We offer staking on our site. So if you stake tokens, that shows that you're participating in the protocol. We have a governance product where you could vote on governance proposals through Coinlist. So all of these different types of actions are like kind of signals of like, hey, this is like a quality token holder. This is somebody who you want to be holding your token. And they could generate these karma points. And if they have enough karma points for our public sale, they get put into a priority queue, which increases their chances of getting an allocation to like 90%. Now, you're like, okay, well, 90% allocation, like what's it like for everybody else who's trying to get on in the general queue? So for our sales, we have anywhere from like 700,000 to 1 million users that will register for sale. Like to get that sort of like marketing and those many eyeballs onto your project, it's not that easy to do that on a DEX, for example. And if there's 700,000, 1 million users that are trying to get part of the sale, there's only going to be 10, maybe like 20 to 40,000 new token holders from the sale. So being in that priority queue, you know, it is something special, and also it aligns with the project. And now what we're starting to do a lot more today is, one thing at Coinlist is like we try and be like very more crypto native than some of the other centralized exchanges that are out there. So when I say more crypto native, one of the things that I'm getting at is like leveraging on-chain data for users' non-custodial wallets to help us understand what their activity is. So let's say we were launching a gaming token. Like if you're launching a game on our platform, you're probably going to want users who are, you know, more geared towards buying NFTs. So like we could go in and we could track of like, hey, like these users of ours own, you know, X number of NFTs. If they do, then they could get put into the priority queue. So like those sort of like targeted mechanisms really do make a difference for the projects, because there's a lot less sell pressure than you would see. You know, there was a launchpad on keep on using Sushi Spot, but on Miso, or Alpha Launchpad is another one. But yeah, like I'd say like those are some of the ways that we differentiate ourselves. And I think that the brand that we've created with those returns that I was showing help us be competitive along those lines, because a lot of projects do want to launch with us at Coinlist, because it is somewhat of like it's recognition, like a kind of like a stamp of approval of like, hey, like it's a legitimate project. Because there is a lot of nefarious activity out there with token launches and whatnot, you know, that you really have no control over in a decentralized world.
You talked a little bit about like the high margin of getting an ICO on the platform. Can you talk a little bit about that, like verifying, you know, all that work that goes in from like talking, like, because you're doing inbound or outbound sales,
yeah,
like all that kind of work, and then the engineering side to get something on the platform.
Yeah, so actually I don't know what the exact margins are off the top of my head, but I would say our downstream revenue streams are higher margin than what our public token sale revenue.
Downstream is like
that would be like staking, trading on the exchange, lending, things like that. And now that's a good question though, because I think that people don't realize. So also another reason why they wouldn't go with the DEX is it's not really like it's on the black and white scale. It's like, yeah, it's like, no, this is like a big no-no from a legal perspective.
The Coinlist or
no. If you're launching on a DEX, I don't want to say a big no-no, but like you're definitely putting yourself at more legal risk for the project founders when, you know, you just launch on a DEX permissionlessly without an entity. But your question was about margin and like the number of people that are.
Well, so you mentioned like last year you launched, I'd say 19 or 20. What is it like, the kind of work that it takes? But if that's a relevant question, I don't know if it's not.
Yeah, it is. Yeah, so the way that the process works is like on the sourcing and vetting side, like I'll call it like the evaluation phase. So that's what I'll handle with my team of, hey, is this the right project to launch on the platform? Yes, no, and then what I'll do is I'll have a meeting with our CEO and COO to get sign off on like, yes, this fits the business case. There's not that much legwork. I mean, the legwork is like me going out and speaking to these teams, working with our legal team also, maybe on the contracts and whatnot. But then that's when all of the legwork happens, is like after it gets passed off for me, which is it's nice. Like I do the sales part, and then the tough ops part, is handed off to someone like Spencer. And I'd say so on the ops side, we have 2 people that would be working on a deal to make sure that everything is getting up and ready for the sale properly, where there will be like an operations manager and an analyst that is working under that manager. So they're working with the teams of making sure that, they have all the proper contract addresses for invoices. They help out putting together like the sales structure of how long the tokens will be locked up for. They take care of custody, they take care of distribution, they take care of the deal content page that we have for projects. So like there's all of these like moving pieces. And then our legal team gets involved, because now those memos that I was talking to you guys about earlier, now like they need to go out and review all of that stuff to make sure like, hey, are we comfortable with these memos that we're getting, and that we can take the stance that this is token. And then like once then the sale happens, and you were asking about engineering help. So like we need to watch out for, one of the key things that we need to watch out for is fraud. So like there's a lot of fraud and people coming on, creating Coinlist accounts, getting an allocation, and then selling their Coinlist account to somebody else who's buying it off the black market. So like our engineering team is working on that. Our engineering team is working on different wallet services. The amount, like we have 700,000 to 1 million registrants per sale. So our website gets a ton of traffic, where I think if you were to go on Twitter, there's a lot of, many times there's upset customers of not being able to get into the queue or not being able to get to the site. And that's one of the things that happens. And that's a good problem to have, because that means that you have something that a lot of people want, right? It would be really shitty if it was just like, oh yeah, like anybody like comes on or like whatever, like probably not growing that quickly. But we raised $100 million back in, I think it was like October of last year, to help us deal with some of those issues, to help us scale. Because I think that we've definitely proven that we have product market fit, and it's unfortunate that we can't run our public token sales in the US, because you talk to a lot of people and they're like, what the hell is Coinlist? I've never heard of it. No, you mean Coinbase? But internationally, we are a known brand, and we are growing our users, exponentially still. So with that money that we've raised, there's been a lot of hiring on the ops side, legal side, engineering, we're like really ramping up. Eventually on my team, probably over the next 6 to 8 months, like maybe start hiring people dedicated to specific verticals. And like I would manage, the sales team across the verticals that way. So for example, one of the cool things that we're looking at today in terms of like new products is getting into gaming in a much bigger way. So there was DeFi Summer a couple of years ago. It seems like the next big wave of applications that are being built, as part of the next big wave, is coming from gaming. And like working at Zynga before this, like I remember when I was at Zynga, I wasn't a huge gamer. Like I played a little bit of video games, but it was more like there just because it's like M&A or financial analysis type stuff. But it was like, these people are buying these digital items, but they can't like do anything with them outside of the game. And I think what's so unique about crypto and gaming is that you now have ownership over the items that you've earned or that you've purchased. And, you know, there's obviously been proven that people do care about the digital items that they do know. You could look at prices of NFTs, you could look at what people pay for these digital items in mobile games that they can't even take. You know, like people spend thousands of dollars a year. Now, giving ownership over to the users is something that's going to really start to grow the ecosystem, and especially when users could start taking their NFTs, like let's say you have a gun that's in a Call of Duty like game, and you could take that NFT and bring it over to another first person shooter game because there's interoperability between that. So I think there's huge opportunity there. So like what we're looking at is like, well, why don't we get more involved with gaming token sales as an example? Now, it's a lot different than the typical token sales that we've launched in the past, because if you look at that list, it's like a lot of layer ones or like infrastructure type of projects that are out there. But all of that needs to be built first for all these applications to be built out on top of it. So it's very natural now that we're expanding at the application level layer of running more sales for that. And we do think gaming is going to be, you know, a very good opportunity or big opportunity. We'll see how it plays out. There's a lot of nuances that go into it, but yeah, that's like another initiative that we're looking at. I forgot how we got into that. Oh, we were talking about like verticals and like getting like different sales teams. So
Yeah, I mean, we've noticed like a clear shift of focus from Coinlist side, that you guys are, you know, putting attention on a lot of GameFi projects. And also gaming infrastructure like Immutable X and Affinity. And Immutable X actually got, you know, a huge part acquired by Tencent. And I just want to ask you, you know, from your experience working with Zynga, from kind of like financial model, because we've seen what play to earn is right now in the crypto sphere. People are coming up with a lot of fantastic token models, tokenomics, and hope that, you know, people would catch on and, you know, more and more players to hop on, even though the games are not as, you know, well built as some of the traditional games I've seen. And, you know, would it be, you know, hard for kind of like the Web2 gaming giants with that puts a lot of money up front for gaming development, and for them to like look at, you know, play to earn games where a lot of the value capture or you know, captured by the players instead of the companies? Is that gonna be like a encumber the current development of the space?
yeah, so that's a great question. Sorry, I'm just looking for, I thought I had water. Is there water?
There's no water bottle.
No, that's not me. Yeah, no, that's a great question. So when I was at Zynga, I was telling you all like, hey, I was spending all my free time in crypto, right? And it's just like, this is so awesome. And I was like, oh, and I'm at a gaming company that's like, it's Zynga, they were bought out over somewhere recently, but I think they're like a $7-8 billion gaming company. It's like, that's so cool. I'm going to be able to pitch crypto and gaming, and we're going to like be able to start something because this is the new revolution. Now, the issue is kind of what you were talking about. It totally turns the model up on its head. So when you talk to a product manager who's working on a game, or somebody who's been gaming for decades, they're like, wait, why am I going to open up this ecosystem, allow for this interoperability, allow for my players to trade amongst themselves and not buy from me directly? I'm missing out on all of these revenue opportunities. Now, I think that's, and I tried at Zynga, and like, to Zynga's credit, like since I've left, they've started, of course after I left, right? They've started investing into, you know, blockchain gaming and whatnot. So, and I've had conversations with their team since leaving. So we'll see what happens there. But the economics of it, like Zynga takes 70% of the revenue that they get from the digital items that they sell, and then like 30% goes to Apple. So they're like, why am I like all these people trade? How am I going to get revenue? It's like, oh, well, like charge like a 5% royalty fee or a 10% royalty fee. Well, then they're like, wait a second, but I'm going to charge 1/7 of what I was charging in the past, and like I have no control over this. Now, What I would argue is that it will increase retention because now people actually own part of the game. Like they want to keep on playing. They could use those NFTs or like they could take them elsewhere. They could sell them. People are just natural. Like you see it with Axie Infinity. People just like play because they want to get more NFTs.
Which game is this?
Axie Infinity.
Is it a mobile game?
It's I believe it's browser based.
Okay.
It's the biggest one of the biggest, or not the biggest, crypto game out there. But if you create this ecosystem where all these players are engaged and they're trading amongst each other, maybe the size of the game, I forget what the size of the mobile game market is. Let's say it's 30, 40 billion. If you gave ownership to the players, I would think it's multiples of that. You know, if you like, if you start to develop good games where people want to own that stuff. So if it's multiples of that, and you have a more engaged player base, that means you're also retaining your players a whole lot better. So it just creates this flywheel effect of like the game keeps on getting bigger and bigger, the ecosystem keeps getting bigger and bigger, and like, yeah, you're taking less of a cut, and it's a lot less of a cut than they were taking. But when you think about the potential size of it, in my opinion, it makes good business sense to do that. Now, one thing that you mentioned was, you know, like the ability, I think, or like to build great games and add the crypto component. I think what I'm seeing out in the market, and it's a pretty like, so like my seat that I'm in, I get to see a lot of the trends like early on because I'm speaking to these projects even before they have a token. And I will say, coming from gaming and like being around product managers who know how to build good, fun games, it's really not easy at all. And I think gaming and crypto, there's a lot of people who know a lot about crypto, but not a lot about making great games. And like the amount of effort and time that goes into managing a game's economy in an environment that you can control, like Zynga, is so hard. Now make this open economy, it's like, it increases the difficulty like a ton. And then on top of it, you're supposed to build a fun game with it. So it's still TBD, and I think it's still like pretty early. I will say though, like over the last 2 or 3 months, I'm starting to see like AAA game developers leaving Riot, Tencent, like Activision, like all of these like well-known brands to go build a crypto game, and they're combining their talents with people who have crypto experience. So like there's kind of like the marrying of, you know, this game development experience with the crypto experience, where I think that that's going to be the solution, or kind of like the makeup of teams that end up being very successful. Could be totally wrong on that, but it seems like that's the path that a lot of quality teams are going down, and that's like one of the themes that I'm currently seeing.
Interesting. On another topic about, you know, what's going on with different kind of gamified or gaming specific blockchains right now at the moment, we see there's like a seclusion between, you know, Float and others, like Wax, for example. It's their assets on there are still not in their people in a decentralized way. People gotta rely on centralized economic changes to do such things. And we talk about like different metaverse, different games, and how those assets can be utilized by the players freely. When do you think that's going to happen? Like, and including like the point that you talked about, how a lot of like AAA games are heading in that direction. When is it going to, you know, how long do you think we can see something like that happen? Have, you know, exactly what we see in like Ready Player One and whatnot in those kind of.
Yeah. If I were to give you a time frame, but I think it would be like a complete guess. I'd say we're still probably a few years out. I think that you'll start maybe to see people start to crack it over the next year or two. So for example, I've spoken to a handful of project teams that are building not just one game, like they'll have, let's say, they have mobile experience. We're building a mobile game, you might be able to do it a little bit more quickly than a console game, as an example. So they're not only just building like one mobile game and like putting all their money, all their eggs into one basket. They're gonna develop a suite of different games that, each game has like different playing mechanics. But there might be similar items that can be used interchangeably between. Yeah, and like I think we're more likely to see interoperability at that level to start. But there's a lot of money that's being put into infrastructure and specifically like interoperability infrastructure to allow all this stuff to happen. My guess would be like eventually somebody unlocks it, or there's some sort of protocol that like sort of figures out how to make it easy for game developers to do something like this. And then like once that moment clicks, I think you start to see that kind of like exponential growth.
And like a lot of security concerns too. We just saw the routing hack the other day.
Yeah.
That went like that hacker stole like
$600 million.
Yeah, $600 million.
Over like 7 days.
Yeah.
Also, by the way. So like nobody, imagine like there being so much money being stolen over a 7-day period, and like on day 7, it's like, oh, does anybody realize there's $600 million?
Yeah, it's stupid. Yeah.
And just think about like imagine the scale that one game Max Infinity brought to the ecosystem. What if we have something that at a broader scale everything is interoperable? The infrastructure has to be there, right? We have to make sure whoever is running the bridge is not economically incentivized to collude.
Yeah, and that's like that's definitely an issue. So like if you look at, so if you're bridging your assets from like Ethereum to Polygon, let's say, like the bridge that you're doing that on, it's probably controlled, like all the funds on there are probably controlled by like 5 to 7 people in a multi-sig, where like if you get enough people collude, like you could have a lot of money that ends up getting lost. So there's things that like need to be done. Now I'm not an expert in this protocol. There's a protocol out there called Entropy. It hasn't launched a token yet. I have not spoken to them, but it's like a decentralized custodian that going back into infrastructure and interoperability, like I believe that if you have like some sort of decentralized custodian like Entropy, there are things that you could, or measures that you could put in place to avoid really large hacks like this to happen. That, maybe there's like some sort of like monitoring of the bridge network through this custodian, or it's like the assets are custodied in a permissionless, trustless type of manner through Entropy of the ones that exist on the bridge.
That's interesting.
Yeah, there's like, and what's really cool is like a lot of times like everybody like in the public hears about these front-facing applications like Uniswap as an example, or Aave or Compound, and like those are like really cool. But there's still a lot of like interesting infrastructure type of projects that, like I'm speaking to a project called CyberConnect that is like Web3 social, that it's kind of like an infrastructure layer that allows you to take your personal identity from one application to the next, and you don't have to go through all these signups and whatnot, like when you go to this new application, because like you have your identity, like you're bringing, like you own that, like you own your data, and you can bring your data to whichever application that you would want. Now, why is that special? Because it allows app developers to start developing applications where like having that cold start problem that exists in Web 2 like no longer exists. Because if you're a Web 2 social app, let's say, like you need to acquire users, which is really expensive. And then once you have these users, you are not, like, you don't have any data on them yet. Like the amount of data that you have is very, very limited. So it makes it incredibly difficult to then compete with Twitter, Instagram, or wherever, because they have all of this data. They know which stuff to feed you, through their algorithms. Now, with Web3 social, if you have users that come over to your application, you don't have that cold start problem of not having their data if they're choosing to willing to share it with you. And then now you could start creating like a curated experience off of a smaller community and compete with the network effects that existed in these walled gardens of Web 2 a whole lot easier. And the other thing that's really cool about that is it feels like makes it easier for app developers to spin up an app because they can leverage your data at your permission. It makes all these developers kind of step up their game because now it's a lot more competitive. You can't be extracting rent from your users the way that Facebook does or Google does or whatever social media app you want to mention. So there's definitely a lot of things in like Web3 social that are going to be interesting, and we're still in the early stages of that, but I'm seeing the infrastructure being built for it. And it goes into what I was saying earlier too, of like, if you look historically, we did a lot of L1s, a lot of infrastructure stuff, but as that gets built out, then the applications get built out on top of it. So you're going to start seeing these Web3 applications being built out on top of these infrastructure layers. Another interesting project to look at with data identity would be Ceramic. And actually CyberConnect builds on top of Ceramic, where Ceramic allows you to track a user's like data, but it's mutable data, it's not immutable. And like, yeah, it's just like this open free flowing of data that just creates all these opportunities.
So let me kind of rephrase what we just said. So you think it would be easier for Web3 social to curate ads because of the on-chain data that they have on their users?
I don't think it's necessarily to curate ads. I think it's to curate a great experience for their users. And it's because if the user, now you need the user's permission to to use their data in like a structured sort of way, and like CyberConnect is what allows this, but it allows an app developer to create a more curated experience that doesn't have to be built up over time. That could be happening right from the get-go.
Because a lot of times in Web3 we talk about like owning our own data, owning our own privacy, but in that case it seems like it's being utilized in another way.
Yeah, but you're allowing that's the whole thing. Is that like you're like, okay, like I'm cool with you using.
Yeah, well, because like let's say Instagram, for example, right? Like we just connected, or I don't mind seeing your feed, but you have to know something about my data that we just connected. Right?
And then release a token to kind of have an ad revenue share model on top.
Yeah, there's a bunch of different things that you can do. So
Andrew, I just want to ask you about this because I just started investing in the crypto market last year. Made pretty good, but then there was a sudden pullback. So I wonder about like the .com bubble and like, Jeffrey mentioned the speculation. There has been talk a lot about regulation coming in the space. So kind of your thoughts on that? Yeah,
so I think you could probably make a case that the NFT market today is more similar to like the 2017, 2018 ICO market where, there's these NFTs that are being sold out into the market. And like some of them have, like CryptoPunks have value, like 0.48, they have value. People are willing to pay up for them, but largely, I think you were saying it earlier, like 90% of these things, like people value their art and like it's kind of like a flex. For sure. But like 90% of them don't really have any sort of utility. And like, I think if you look 5 years down the line, it's gonna be like, what the hell was I buying this thing for? Which will be maybe a fair question to ask in 5 years. But so I think NFTs might be similar to that time frame. I think what's different with what we're seeing today is that at the application level layer and at the infrastructure layer and layer ones, there's actual like technology underpinning what's being built. Like there's an actual application that's there. So like Aave, if I want to go deposit my ETH to take out a loan, like it's on chain, like it's there. There are people using it. There's billions of dollars that are locked up in that protocol, and Aave is not the only example, but a lot of these applications have that sort of characteristic. Now, 2017, a lot of this stuff was vaporware, where somebody's saying like, hey, this is what I'm going to create, and let's mint a token out of thin air and get a bunch of people to pump it on Twitter. So somebody buys it, and then like the people who minted the token, like
Crazy valuation.
yeah, it's like stupid sort of stuff. So I think it's different in that sense.
I guess like, cause I have family members, people asking and like, oh, let me throw money into Doge, right? Like as one thing, but like you mentioned thousands and thousands and you guys only added 19 to your change. Like just, you mentioned the 600 million, like I'm in the government. I'm like, do we have to protect citizens, like people from just losing all their wealth because someone pumped something on Twitter and told them to like dump all your money into this, right?
Yeah, I might be so like this is like
They should lose their money?
This is like no, well, this is like my personal belief is like if you're putting your money into something and you're not doing any sort of research, like that's kind of like shame on you. There shouldn't be regulations in place to be like, oh, hey, you shouldn't know what to do with your money. Let me tell you what to do with your money.
Yeah.
And that's exactly what the SEC does, because if you look at accredited investor laws, you need to have a certain amount of net worth to be able to invest in, certain investment rounds for VC deals or private equity deals or whatever it might be. Now with crypto, it gives users and empowers users to like own the token early on and before the network has really been bootstrapped to grow to be really significantly large. And then the people who are benefiting from that are the early adopters and early community members. So I would argue that like crypto actually opens up opportunities for the average person that's out there to invest and make money. Like what stocks, like if you were to just invest in like all of like these, like these are probably like all of our best performers. If you were to invest in all the sales that we've ever done in an equal amount and you compare it to what your returns would be in the regulated equity markets or bond markets, it wouldn't even be comparable.
Yeah.
And like so like Coinlist, and I think there's a slide on this, that we offer, it's like earlier on, like venture-like returns by allowing our users to get engaged into these projects at their earliest stages to really grow their wealth.
Yeah, I think that was a great discussion, and we're almost running out of time. So I have one more question for Andrew.
Yeah.
So obviously you've worked at traditional finance before jumping to Web3, and I just want to ask, like, what's your take and what's some of the advices that you would give to people in this room, people on Zoom, who are looking to work full time in Web3, and you can relate a little bit to your experience?
Yeah. So like how to get into it, like the barriers to entry are probably lower than a lot of the other industries that you see out there.
Yeah.
Like to go work at a bulge bracket investment bank or like some like white shoe law firm, like you need to go to the right schools and get the highest scores. And it's just very like structured and like this is just like these are the steps that you take. Now I think in Web3, what it's opened the floor to is you could just go and start getting involved in a DAO that you find interesting. Like it doesn't have to, it could be a DeFi app, it could be some gaming app. There's a DAO that's trying to go buy a golf course called the Links DAO. Like go and start getting involved in that and participating in, they have governance forums, like write a proposal. Like there's on Grow Protocol, which is a DeFi app, like I wrote a proposal on there that ended up getting passed. And like, when you do those types of things, you'd be shocked of like how open like these core team developers would be to talking to you because you're helping them. Like you're being like a supportive community member to help them grow their community. So all these like barriers of like where you went to school or who you know, like start to come down. So get involved in some sort of capacity. If you're a good writer, write some investment memo pieces, and create a Substack and start just releasing it and like tagging people on Twitter, who might own it, and like maybe they retweet you and you start getting like a following. I went to business school with a guy named Justin Bram, where he's like a DeFi influencer now, and he gets allocations to some of the hottest crypto rounds because he has this YouTube channel where he shows people how to use a DeFi protocol. So and now he's doing very, very well. And all it takes is just like getting involved. So that would be my main advice. And then also when thinking, I wouldn't say my recommendation would be like figure out what you're good at and what you like to do. Like, so with my role at Coinlist, like if I look historically what I did a lot of like investment research. I had a little bit of a sales background, like finance focus, understanding how to like analyze a project, like who's the team, how big is the market, is there product market fit, like all of those types of things. Now, like those skills could be used in crypto, like probably at a crypto VC or in the role that I'm in where I'm vetting the different opportunities that are coming through. Now, maybe your skills are in marketing and you're a hell of a designer. There's a lot of DAOs that are out there that are looking for designers. And there's also like, I don't know if we have any openings, but I assume that we probably have some like designer spots. So it's really like finding your passion, getting involved as much as possible, and doors will start to open. And it's not like every door that opens is going to be useful, but you really just need one of them to like be like, hey, yeah, come on in, like we'll take you in. And that's what happened with Coinlist. And like I'm as happy as I've ever been because I'm working in an industry that I love with a great group of people at a company that's growing like very quickly, where there's like upside as well. And, like things just worked out by following your passion. And I'm sure like so many people like say that, but it is actually true because up until that point, there's like 12 or 13 years where like I didn't know what the hell I wanted to do. And then I finally found it. And then when you find that thing, it clicks and you're like, okay, this makes sense.
Yeah. Let's take one question.
Yeah, I have one quick question.
Yeah.
So I know there's this huge wave of airdrops, and I'm currently working on a crypto project with a native token, and we're thinking about doing an airdrop sometime in the future. But what is the main benefits of going through a Coinlist ICO as opposed to an airdrop if you can directly send it?
Yeah, so it depends. Like, Coinlist isn't the right platform for every crypto project. If let's say you're a consumer-facing DeFi app, like Uniswap as an example, like they had, I don't know how many users, I think they had like thousands or tens of thousands of users who interacted with their protocol, where they already had some sort of community that was built up, that there were on-chain metrics that they could be like, hey, like, yeah, these people are our users, let's reward them with an airdrop. Now, on Coinlist, like we could structure things in a secure and compliant manner and like keep everything above board from a legal perspective. Not every project cares about that. We could run the airdrop on our site, but like if I had a retail focused app with tons of users, I might decide to do an airdrop. Or maybe you could go through Coinlist for a portion of your network supply and then do an airdrop after the fact. It's a long-winded answer, but then there's like infrastructure and layer ones that are less consumer facing. There's not like there's that many users that are using it when they first start, right? So going to a platform like Coinlist, where we have relationships with all of the biggest validators that are out there who could serve as community supporters to help grow the network. So like there's a lot of things that we could offer these layer ones and infrastructure protocols that they otherwise wouldn't be able to get in the normal market. But on airdrops, I think that it's gone a little bit too extreme to the point where like I've gotten a few $1,000s worth of airdrops just because I was part of a Discord channel. And like I had never used the protocol. Like there's no way, like you can't tell me that that's like a useful way of using your tokens. you know, really, if you're doing an airdrop, make sure that it's targeted to your users and rewarding the people who are using whatever it is that you're building.
Yeah, because you mentioned that whole the mechanism of finding like the people who are most aligned with the protocol for the ICO.
Yeah.
But I almost feel like it's, you know, just like going directly to the most active users on your protocol would almost be more.
Yeah, and but like in some cases though, like the number of users that are actually using these protocols like very frequently, it's not as many as you would think. Where there's not another platform that you can go out and get 1 million registrants, you know, for your sale. And like there's something to be said of like getting 1 million eyeballs on your project at an early stage on like a well-branded platform. Because now people are talking about it on Twitter and like it just creates a sense of like really high awareness that you otherwise wouldn't have gotten.
Could that be kind of problematic though if you just have 1 million users, like 1 million eyeballs without users, like creates a pump and dump scenario?
Yeah, but then that goes into what I was bringing up earlier of how like we work with projects to target it, you know, who their token holders are going to be. So like that Karma product, for example, like we're tracking are these when they get distributions, are they longer term token holders or are they dumping their tokens the moment they get a distribution? If they dump them, then they're not getting those Karma points. Are they staking? Are they if they're staking, that means they have also held their tokens. So in that sense, like they get into the priority queue, and then we work with the core teams, these project teams, to target their users. They might provide us some like on-chain data to be able to do that, but it becomes much more targeted. Where if you look at like a Binance launchpad, I'm pretty sure Binance does not go to the same extent that we do to curate who the token holders are going to actually be for the project. And I think that's like a really differentiating factor that we have. And like I think a fair question would be like, why doesn't Coinbase do this? And yeah, I think maybe they will do it at some point. But if we get this curation down and we have the data on our users of who the highest quality ones are, like we're going to be able to run more successful sales than a Coinbase. You know, maybe like Coinbase buys us one day. Yeah,
All right.
nice.
Thank you.
That was a great talk, and I know you have to get going, Andrew, but let's give a round of applause for